Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message. I deliver it every day on Ron Siegel Radio, where we have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly at 800-306-1990. 800-306-1990 or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990. 800-306-1990. Today we celebrate National American Beer Day, observed annually by beer drinkers across the nation, October 27th. There are more than 2,100 breweries that manufacture beer in the United States. They range in size from industry giants to brew pubs to microbreweries. The U.S. produced 196 million barrels of beer in 2009, latest numbers we had available. The U.S. consumes roughly 20 U.S. gallons of beer per capita annually. Being that I don't drink any beer, someone's making up for me. The United States was ranked 16th in the world per capita consumption, while total consumption was second only to China. Interesting information right there on the markets, but that is the celebration today. We're looking at the markets. What are the markets doing? Very, very volatile day in the markets. Dow Jones Industrial Average up 39.86. Oil up 82 cents a barrel. And the U.S. Treasury taking a big jump. 1.85 is the yield on the U.S. Treasury, up almost 0.06 of a point. It's a pretty big jump for the U.S. 10-year Treasury. I'm going to tell you exactly why that is happening right now. Weekly jobless claims fell by 3,000 to 258,000 last week, higher than the estimate of 255,000. The prior week was revised higher by 1,000 to 261,000. The U.S. Commerce Department reported durable goods orders fell 0.1% in September from the prior month. Estimate was for a rise of 0.1%. We're going to start seeing some very questionable numbers coming out over the next 10 days before the election. I'm going to suggest to you that you got to watch what you're reading, watch what you're seeing, just see if it makes sense to you, how it feels to you. Don't take them all at face value, especially as we see more and more that some of the numbers, some of the information, some of the reporting may be a little bit tainted here and there. The National Association of Realtors reports contracts to buy previously owned homes rose 1.5% last month, higher than the 1.2% rise economists expected. And here's the biggie. This is the reason that we're seeing the big changes in our 10-year Treasury, which is having an effect on the mortgage-backed securities or interest rates for your mortgages. And this is all coming from outside the U.S., and it's caused global bond yields to move higher this morning, including the U.S. mortgage-backed securities. In the U.K., third quarter GDP growth was stronger than expected. In Spain, the unemployment rate declined more than expected. And an official from the European Central Bank later reminded investors the ECB will decide whether to extend its bond purchase program in its next meeting December 8. And given the strong data concerns that the ECB may provide less additional stimulus than expected, and that's helped push the bond yields higher. In addition, the governor of the Bank of Japan said the Bank of Japan may not increase its bond purchase program. So you got all those different issues. Think about that. You're starting to see these different foreign countries saying, yeah, maybe this quantitative easing, these bond programs, they may not be working the way we thought. So maybe we'll stop doing them. Maybe we won't continue those programs as we had originally anticipated. And the markets are reacting. The markets always react. So we're going to see where we're moving with some of those items as the weeks and days progress. Here's the other issue that we're seeing on a regular basis, seeing consistently, is there are some numbers that we're hearing that may be a little bit better than what they were projected. And I'm going to suggest to you next week is going to be an extremely, extremely volatile week. We're going to see the numbers come out for new jobs comes out at the end of the week. We're going to see GDP release next week. And I'm going to suggest, not that I'm a conspiracy theorist, but maybe I am, but some of those numbers may be a little bit better than what they feel like to you and me, to what you're seeing on the streets. And if that's the case, just be aware that maybe they'll be corrected the following week, which, oh, by the way, just happens to be the week following the election. So that's just some thoughts right there. Again, you got to watch the markets, watch where we're going, watch what's happening, and you'll be able to understand some of these different issues. Got a great story. Are you a sports junkie like me? Yeah, I know there's a lot of folks out there that enjoy the sports, but here's the fun one that I saw that just came up from yesterday as we're watching the new numbers or the new season in basketball coming out. I was watching and I saw this news report. The Philadelphia 76ers, they decided to pull their national anthem singer 2 minutes before game time. Yeah, they told singer Seven Streeter, and I have no idea who Seven Streeter is, but she was going to sing the national anthem at the Philadelphia 76ers, and she went to go on stage wearing a jersey that said Lives Matter. And either the arena or ownership of the team saw that, and not quite, Miss Streeter, you're not going to be performing tonight. She was canceled, and they had one of their song girls actually sang the national anthem. They did that 2 minutes before she was about to walk out on stage. Claims I was never given any kind of dress code. I was never asked beforehand to show my wardrobe. Well, you know something? Sports is not all about her political stage and her 5 minutes of fame. Oh, well, in 2 minutes, she was 86th, and I applaud the Philadelphia 76ers for doing the right thing. Maybe we can get the people over there at the 49ers organization to follow along and applaud people doing the right thing instead of these goofy things like this Colin Kaepernick jerk that continues to disrespect. And don't get me wrong, he does have the right to be disrespectful. That's what the First Amendment basically says, is that we all have the right to be disrespectful. But some of us who have a different set of values, who have a different set of beliefs, we also have our rights. And Mr. Kaepernick, I'm hoping that eventually that they'll feel that. We are seeing, ironically enough, here's the truth in the pudding. And the NFL does not want anybody to know this, but the NFL numbers are down. Their ratings are down. That's where their money comes from, is from the ratings that they get on television. Their numbers are down. Yet, arguably, we have a World Series with two teams that are relatively small market. They're not obviously the Cubs have a big following, but they're not the New York Yankees. They're not the Los Angeles Dodgers. I'm not a Dodger fan, but they are not either one of those organizations. Yet, the ratings for the World Series are, I think it's the second highest of all time. So it's not that people are anti-sports, and albeit the World Series games, they move a little slow. But people are watching them, and the NFL numbers are down, and thank goodness for it. I'm glad to see. I don't wish ill on anybody, but if they want to promote this character Kaepernick, well, maybe the people are going to have their say in the marketplace as well, because we all get to have that input. I'm going to talk about today, watching what's happening in the bond market. What does that mean to you? Now, you and I have talked about this before, the issue of what the effect is on the bond market, the 10-year Treasury, to the 30-year fixed-rate loan. Well, this morning, we did get the Freddie Mac Mortgage Market Survey 30-year fixed-rate loan at 3.47. So the mainstream media that does not educate you on these issues, they just want to go out there and sell newspapers. What they will be telling you today is that the interest rates are going down. Well, the fact of the matter is remember, if you're a Ron Siegel radio listener, you know this already, but don't forget the idea and the concept that Freddie Mac market survey is not something that's done today. It's not based on today's numbers. They collect that data on Monday through Wednesday every week. They report it on Thursday. Interest rates today are going up. So be aware of that. We just want to make sure that you're, and again, I'm going to share with you, if you have a loan that's not locked in, do not lock your interest rate today. The bond market always, actually the bond market, stock market, they always overreact. Every market always overreacts. So when you see a big jump like we're seeing today, where the 10-year U.S. Treasury is already up about 6 basis points, 0.06%, and the mortgage-backed securities are going down, yield or the price of those going up just like that 10-year Treasury, well, that's when you're going to start seeing that there's going to be that overreaction. And if you wait a couple of days, I would suggest you'll probably see those interest rates come right back down again a little bit. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, we will be chatting percentage of home ownership by decade and by state. What's happening to it? The biggest surprises for retirement, really bad money decisions millennial homeowners are making. We're going to talk about all of those items and more. You can reach us anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams, or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
What if your family business could help clothe a less fortunate family? Or your restaurant could feed truly hungry people? What if you could help to comfort the lonely? Plant sustainable resources where nothing has ever grown before? Or make a child's lifelong wish come true? What if all you had to do was simply do nothing more than what your business already does every day? Would you do it? Introducing Processing for a Cause, a unique program that turns a percentage of your business's credit card volume into ongoing donation dollars for nonprofit organizations and foundations. Simply switch your credit card processing provider to Processing for a Cause and begin supporting a worthy cause today. The process is simple, and the cause will change lives forever. Processing for a Cause.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 0186945.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area-trusted real estate professionals of Ron Siegel Radio. Text PAIR, P-E-A-R, to 79564, PAIR to P-E-A-R, to 79564. One of the real estate professionals will reach out to you to get you the true equity position of your real estate. Percentage of home ownership by decade and by state is the subject. Been a lot of talk about the falling home ownership rate in the United States. December 2004, the home ownership rate reached an all-time high of 69.4%, while the current rate is 62.9%. When we compare these two figures, there is some room for concern regarding the difference. However, today, we want to really shine some light on the issue by one, showing what historic home ownership rates have looked like over the last, say 130 years or so. And second, breaking down the current percentages by state. So some very interesting information that's come out. 1900, the home ownership rate in that decade was 46.7. Today, again, 62.9. 53.6 is the home ownership rate in the state of California. We're well below that of the United States as a whole, 63%. All of the states, and we're going to put up a map of this right there on Ron Siegel Radio on the Facebook page. All the states on the map, when you look at it, that are in blue, have a greater home ownership rate than the national average. So California is not one. Now, here's an interesting observation. A lot of the middle part of the country has a greater home ownership rate than the national average. Though the home ownership rate has fallen recently, the percentage is still at a healthy rate compared to historic numbers, and most states currently have a higher percentage than the national average. Again, California, we're a little bit below the national average. We're at 53.6. National average is at 63%. Kind of helps skew the numbers, too, when you got one of the biggest states that's a little bit below. And Texas, 61.1, they're a little bit below as well. Kansas, 66.4. Utah, 68.9. Wyoming, 68. So you're starting to see some of those middle states. Maine, 71%. That's where you're looking at some of the real strong. Vermont, New Hampshire, all on the high end of the spectrum. Minnesota, Iowa, Michigan, West Virginia, all high ends of the spectrum. Well, they can't carry the whole country. They're not big enough states to do that. Think about that. That is the real-time real estate segment, again, brought to you by the area-trusted real estate professionals of Ron Siegel Radio. Text PAIR, P-E-A-R, to 79564. So I wanted to share with you, what does it mean to you when we see this home ownership rate, or the Freddie Mac rate that came out this morning that's not quite as good as we had hoped? Think about some of these numbers. So the Freddie Mac rate comes out, and obviously, as I shared with you, it is a little bit of a misleading number right now, simply because I just shared with you the concept of that's from Monday to Wednesday when rates were lower than they are right now. But still, here's the issue that we need to contemplate. Even when interest rates go up, it doesn't matter what interest rates are doing. What is important is, how does it affect your family? That's where the important part of this comes from. So I did a little bit of research on this. Our team put this together. And we're looking at this year, right now, as we speak to you this morning, the Freddie Mac rate, 3.47%. You had to pay some points to get that rate based on the Freddie Mac Mortgage Market Survey. 3.47. 1 year ago today, that same Freddie Mac rate, actually it was October 29th of last year, it was 3.76. Both instances you had to pay that 0.6 points. So 3.76 versus 3.47. So let's think about this. What if you bought a new home last year and you got that 3.76% 1 year ago this week? And again, not everybody qualifies for it. Since 2011, there are 30 unique variables that go into determining what your mortgage rate will be. 30 variables go into what your mortgage rate will be. But what's important here is your mortgage is only one part of your overall picture. What you need to understand is, and again, you're not going to get this when you go to the Walmart of loan professionals. You got to go to somebody that understands lending from a financial planning standpoint. What is your household blended interest rate? Household blended interest rate. It is a big difference what your household blended rate is versus what your mortgage rate is. Because when you take a look at a blended rate, you're taking into account everything that goes into your household's expenses, anything that you've got a debt on. So I try and keep this number fairly consistent just because it's a number that we use for people, and it's a real number, a real client that we've done this with. I had a client that wanted to buy a house, and we looked at their numbers, and it was out in the Corona area, so their county lending limit is lower than it's in Orange County or Los Angeles County or San Diego. Riverside is a lower lending limit. Had to use a little bit of strategic planning to get them the property that they wanted at the price they wanted. So their home loan was a $365,000 loan. They had a $75,000 home equity line of credit. And yes, they did put a good down payment down as well. Probably, from what I remember, it was probably $75,000 for the down payment also. Maybe a little bit less, maybe $50,000. Hypothetically, let's use the Freddie Mac rates because I'm not giving you APRs. We're doing this for educational purposes. It's not an offer. But if we use last year's Freddie Mac mortgage market rate of 3.76, great rate, 3.76 1 year ago. And they had a home equity line of credit that's now at 5.49%. And home equity lines of credit are generally very, very closely related or mirror what the Federal Reserve is doing because most of the home equity lines of credit are based on prime rate. So the Fed's already told us that they're looking at increasing their rates this year. They only have two opportunities to do that. Next week, right before an election, they're not going to do it then. Or the beginning of December, that's their last opportunity. A lot of folks think that that's when it's going to happen, that they will raise rates at that time. So we're using that 5.49, which is where we are today. We took two $13,000 auto loans, one at 5.49%, one at 5.95%. I'm sorry, 5.95 and 6.95. Don't know what your rates are, but those are decent rates for somebody that's got debt. We had three different credit cards. They totaled $15,000. Again, an average number, an average household number in the U.S. And we did those at interest rates from 15% to 30%, splitting it right down the middle. And we had a student loan in there, again, national average, using 7%. The household blended rate for this client, or this hypothetical scenario, it's not a client, this scenario, the blended rate comes out to 4.95%. That's what really is the meaningful number. The other numbers, they don't mean squat because they're just one piece of a big puzzle. If you have a puzzle and you have only one piece of it, does that tell you anything about the puzzle? I don't know too many people, but if you have a 1,000-piece puzzle, if you give them one piece, they can tell you without the box what that puzzle is. So you don't worry about what one number is. It doesn't matter that you've got a 3.76 interest rate. Your blended household rate is 4.95. Now, let's take a look and see what that means to this household, because now what we need to do is look and say, okay, what if we are going to restructure this household debt into today's market? Well, today's Freddie Mac mortgage market rate is 3.47. So all the numbers that I gave you in the last scenario, not counting property taxes or homeowners insurance, because those numbers are going to carry through no matter what you do. If you do nothing or if you do something, those numbers will carry through. Want to know how much money you will save by restructuring this? A very, very significant number, and we will tell you that number when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. We will also chat a little bit about the biggest surprises found in retirement, really bad money decisions millennial homeowners are making. You can reach us anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details, 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender, licensed under NMLS number 217037.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel Lending Team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel Lending Team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel Lending Team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Do you own real estate or have assets over $150,000? Do you know one of your heirs will be the probate courts and the IRS? If you don't have a living trust, you will go through probate. Call Heritage Financial Services toll free at 1-855-434-7400 for a free review. Check us out on Facebook, Heritage Financial Service in Lake Forest, California. That's 1-855-434-7400. Again, 1-855-434-7400.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering this every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Word on Wealth segment today brought to you by askaboutreversemortgages.com. Are you over 62 years of age? Do you have equity in your property? Reverse mortgage might be a great solution for you to help the cash flow, protect your equity, be prepared for the unexpected. Really bad money decisions millennial homeowners are making. Millennials are often described as prioritizing leisure and entertainment, but many are going into debt to fund them. Most financial planners caution homeowners against using home equity loans to fund short-term expenses, including vacations. Yet that is the most popular use of the money for more than half U.S. homeowners between ages 30 and 34 who have owned a home for 3 years or more and have taken out a home equity loan for vacations. No, don't go doing that kind of stuff. There are good reasons to take money out of your property. The idea, though, is not for that to be for a vacation. It's not for it to be to buy a new car. If you're going to take money out of a property for some reason, that would be an investment, something that's safe and secure, more secure or a higher yield than what you're already getting. Most financial planners caution homeowners against using home equity loans to fund short-term expenses, including vacations, yet that is most popular. It mystifies me that they're taking out additional debt, according to one of the financial gurus at the Milken Institute, but it doesn't really surprise me that they're using alternative financing to fund certain things. Think about those payday loans that young people are getting into right now. Unbelievable. That is the Word on Wealth segment today, again brought to you by askaboutreversemortgages.com. So we were chatting a little bit about this idea of a debt consolidation loan and what it really means, what your blended household debt is, and why is that so much more important to you than any single individual debt you have. So think about that. Almost everybody would say that 3.76 is a very, very good home loan rate. That was the Freddie Mac Mortgage Market Survey average rate that someone could get last year, October 29th, 2015, paying 0.6 point to buy down the interest rate. And again, that's averages. They're going through a lot of different companies to find that out. And I shared with you that today that Freddie Mac came out with their mortgage market survey. Again, they do it every Thursday. They release that data. And today's number is 3.47%. Again, that's on an average with 0.6 buying that rate down. And we went through and we looked at the various debts. I'm not going to go through the full line of debts that we did in the last segment. If you missed that, feel free to go back and listen at any time. Ron Siegel 1 on YouTube, Ron Siegel the numeral 1 on YouTube, or you can go into the ronsiegelradio.com archives. We usually have the broadcasts up within a couple of days, so you can listen to the replays there. But all of the debts that we discussed came out to a combined $529,000 in debt. Now, I know when people are in debt, that means they don't have a lot of cash on the sideline. So I'm looking at this, doing a new loan for these folks. What if they restructure their debt and put the new debt in, and they're not coming out of pocket? They're going to probably have to pay for an appraisal. That'll be the only thing that's not rolled into a new loan. And if we use the old numbers, again, I told you it was a 4.95% blended debt. $3,534 was their total monthly obligations on this debt. Now, remember, a lot of that has to do with the fact that I did put the credit cards in there using a 10-year payoff. If you're only doing the minimum, you're probably going to be closer to 300 years to pay that off. But if we can get a 3.47, the Freddie Mac mortgage market rate right now, that comes out to $2,384 and change, as opposed to that $3,500. That is a savings of $1,149. $1,149 in savings each and every month. Now, what do you do with that $1,149 in savings when you're dealing with debt consolidation? Well, don't go and increase your credit card spending. Don't go and build all of that up again. That's not going to help you. What I want you to do is take part of that money and enjoy it. Take a couple $100s a month, add it to your budget of what you spend. The balance of that money, use that to pay down your principal of your property. Why not pay it down a little quicker? You might even want to take some of that money and put it into a sinking fund or a savings account for new cars, because we put in there your auto loans as well. We built those into your home financing. Now, you don't want to be paying for your cars for 30 years when you know that they've got a useful life of 5, 6, 7 years, something like that. So we're saving $1,100. Take the same $625 that you're spending right now on auto loans and put that money into a separate savings account. That way, when in 4 years, which you were going to be using to pay off that car that you have right now, you had two 4-year loans. In 4 years, you're going to have X amount of money set aside, and you can go in and pay cash for a car. No debt. See, I have no problem with debt. I like people to have good debt. It's the bad debt where we have the problems. Bad debt is auto loans where you're making a payment on a depreciating asset. Good debt is houses. It's real estate investments. Those are the things where you can make money, or your money can make money for you. There's very few people, especially if you go buy a new car, very, very few people buy a new car and can sell it for more money than they paid for it. The auto dealers will tell you that is the dumbest thing you can do. If you get them off to the side. They're not going to tell you in public that's what it is. But if you have a friend that's an auto dealer, they'll tell you that you've got a much better value in buying a used car as opposed to buying a new car. So why wouldn't you go to some of the different brokers that are out there, and you can take the cash, which is the way they prefer to deal. You don't have to be cash, but a check or whatever, but payment on the spot. Engage with somebody that will go over to one of the car auctions. You tell them precisely what you want. Don't be in a big rush. Give them some time to do their thing, and they'll find you the car you want. I've seen cars come through the auctions with maybe 1,000 or 2,000 miles on them. I've seen them as low as 150 miles on them. But get a car, the exact car that you want, low mileage, through the auction. They will even do all of the research for you and tell you the exact condition of the vehicle. And do you think that you can afford a better mechanic, or can the auction afford a better mechanic? They've got 3,000 cars a week going through those auctions. 3,000 cars a week. Now, a friend of mine was the number one. He worked at the number one Jeep dealer. I don't know whether it's America or in California. They were number one. They did 1,000 cars a month. Huge dealership doing 1,000 cars a month, yet the auction does about 3,000 cars a week. They do 3 times the business in a week than top dealerships do in a full month. Who do you think has the capacity of hiring a better mechanic? The consumer, the client of the auctions, is not you and I. We can't get in there. We're not allowed to. A dealer has to be the one going in there. Do you think they want to be buying something that's going to cause them problems down the road without knowing it? No. That's why the auctions have it set up where they can get a certification, a rating level on every vehicle before they start bidding on it. Then they have an opportunity afterward to have additional certifications done. And if you're dealing with the right people, you can even reject the car after you've already bought it through the auction process. Think about that. How much money can you save? And I just showed you how to save $1,100 a month. Now, let's just hypothetically say, and again, I want to really share this with you, drive this home, because one of the first questions I get on a regular basis when I'm talking to people, I'm consulting, they want to know what is today's interest rate on a loan? What is today's interest rate? The difference in interest rates and understanding these issues really doesn't matter. Because I don't ever hear somebody that calls and says, Ron, can you give me a referral to the cheapest cardiologist you can find? You don't hear that at all. There are lending companies out there, and you're free to choose. You can, just like you can go to Walmart and buy a shirt, or you can go to Nordstrom and buy a shirt. There's going to be differences in those two products. They're both going to cover you, just like a mortgage. You can go to Walmart and get a mortgage, or you can go to Nordstrom and get a mortgage. Theoretically, the same correlation. Are you going to learn these nuances? Now, here's the big difference. The difference between the same exact loan with the $533,000 loan, 4.25% interest versus 3.47 interest. The big difference there. You're talking about $300 a month, a little under $300 a month. Think about that. So now, where I told you before you're going to save $1,149, well, now if you can't qualify for that 3.47 and you do qualify for a 4.25, well, now you're looking at $2,600. You're saving $912 a month off of your current blended household interest rate. Remember, we're still talking about that same blended rate because that's all that really matters. We don't care about an individual rate. We care about what you're paying as a whole portion of your budget. So the difference between 4.25 to 3.47 is $237 a month. But that's based on your savings. You're saving $900 still on the 4.25% rate. $900 a month saved. That's why you need to know, what is your blended household rate? Do you know what that number is? How do you make an educated decision if you don't get educated? You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, biggest surprises found in retirement. That will be our subject. You can listen to us. You can reach us anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. And if you miss any part of our broadcast, shame on you. But you can catch the replay, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. About 500,000 people a month are checking out those replays. Or you can go into the archives, ronsiegelradio.com archives. You get the audio version right there as well. iTunes. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Isn't it time you found out the truth about FHA-insured home equity conversion? No, it's not your grandfather's reverse mortgage. This just may be the finest financial planning strategy available for all homeowners of retirement age. Helping protect what you've earned is the job of your board of directors with continued education. Major research has shown that using a HECM will significantly enhance the success rate of a retiree's portfolio and legacy. Please allow us to educate. For your complimentary consultation, call Jay Kaplan at 949-300-3855. That's 949-300-3855.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year. The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel Team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRENMLS 217037 and 145502 and Cal BRE 01869452 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message. And as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Your Credit Matters segment today being brought to you by CreditSanitizer.com. You had a credit report. It is wrong. What are you doing about it? Credit Sanitizer has the solutions for you. Biggest surprises found in retirement is today's subject of the Your Credit Matters segment. Love getting some of these information compiled for you. So what is the biggest surprise about retirement? This is from a Wall Street Journal article. I got this one. The final decade for a individual. They basically followed an individual around looking at what they found out. So much for expectations. Expenses. The importance of drafting a retirement budget is a theme that pops up regularly. And this individual did just that. Like the emergency room visit they did not plan on, and physical therapy, about $1,000. Helping a granddaughter when they moved, another $1,000. 2 plumbing emergencies, $700. The list goes on. Some advice: pace yourselves, have a budget, understand what you're looking to do, understanding how long you're going to be in retirement. A lot of people, they both retire. Once they're both retired, husband and wife, decide they're going to travel, but they put it all into 1 year, and then they get bored after that. It's a lot of expense to these things. Be careful. So too much travel too quickly, unexpected expenses, having a lot of time to try and fill. Those are all subjects that you need to really be careful of when you're looking at how are we going to deal with retirement? What are we going to do when it comes to our budget, our finances? Are there other ways of dealing with finances? How about taxes? Talked about Jay Kaplan a lot, helping people out with their taxes through the reverse mortgage process. See, one of the things that I like to share all the time is you can always, again, just go and deal with these issues on a single basis. But remember, you are always, always, always dealing with financial planning. And everyone, getting a reverse mortgage, you can go on watch the television and see these companies that do reverse mortgages. That's pretty simple. Doesn't take a whole lot of rocket science to go on there and listen to the folks there doing the reverse mortgages. But can you plan from it? Are they talking to you about how you can reduce your taxes, how you can increase your Social Security strategically through the use of the reverse mortgage? Are they talking about how you can protect your home equity by using the reverse mortgage? No, they don't talk about those issues because so many institutions are strictly transactional based. They're not looking to be an advisor for life. Big issue there. Just want you to understand not everything is related and they're not all created the same. Big issue there. So think about all these different tools that are available to you. Just a thought there. That, again, is Your Credit Matters segment brought to you by CreditSanitizer.com. If you haven't looked at Credit Sanitizer, if you haven't checked out what they're doing there, I'm going to highly recommend that you take a look at what's going on at Credit Sanitizer. I see a lot of credit reports on a regular basis, and I'm going to share with you, very, very rarely do I see a completely accurate. In fact, I don't think I've ever seen a credit report that was completely accurate. It just doesn't happen. Do you think yours is now that because everybody else's is not? You think you're going to be the one that has the completely accurate credit report? I'm going to suggest that's probably not the case. Go to Credit Sanitizer. Make sure you're looking at your credit report regularly. Make sure that you've got a plan for it. Make sure they've got two buttons on there that I really promote a lot. The one button is the top left button. That's an annual plan that you're dealing with, and they're looking at your credit report all the time. You pull one report, and they'll start helping you go through and correct the errors that are already on your report. The second issue that's there is the middle button in the top row. That's a monthly report, a monthly program. It gets you LifeLock, and it gets you a prescription drug shopping service and a number of other things in there. It's a more comprehensive package. Again, it's going to work on cleaning up your credit report, getting the errors off there. Just a simple process for you. Because what ends up happening is once you go through and do the debt consolidation that we've been talking about this morning, we want to get the errors off your report. We want to make sure that you've got all the accuracy in there, because if the scenario comes about that you don't qualify for that Freddie Mac rate at 3.47, and you have to pay a higher rate, maybe 4.25, 4.5, whatever that number might be. Well, the bottom line is we want you to be in place to redo that on a strategic basis. You see, if you get a 4.25 rate today because you don't qualify for the lower numbers because of either your credit score or too much debt utilization numbers, or you got too much debt overall, you see it's harder to qualify for a $3,000 mortgage when you've got $1,000 or $1,500 worth of other debts. Think about that. Now you get your finances in order, and you pay off the cars, you pay off the credit cards, you pay off the student loans. You've got a lower mortgage payment. Now you get involved and you talk to one of the great real estate professionals that we introduce you to. And when you do that, now you're able to qualify. You got more buying power to buy a bigger house for you and your family. What do you do with the existing property? Well, that becomes a first home in your portfolio. Rent it. There is a significant shortage of homes right now, a significant shortage of rental properties in the marketplace right now. So rent out your existing property, continue to get that property appreciating for you, let somebody else pay the mortgage, that's called a renter, and you go buy a bigger house because you can. It's pretty simple stuff. You just have to understand how you're going to do it and have a game plan for it. That's why you can go to the transactional lenders, or you can go to a planning institution, and you got a whole big difference there when you're going transactional or planning. Think about that concept. Amazing information. You are listening to Ron Siegel Radio, and be sure to set that first radio preset button to come back here every day to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Steve, who's engineering us today, and of course a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime. 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money, help a lot of people, have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing
missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details, 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender, licensed under NMLS number 217037.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel Lending Team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel Lending Team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel Lending Team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.